Good evening, Soaring Prophets and our profiteers. Welcome back. As always, you got the dynamic duo of Patrick and James. James, how are you doing tonight, pal?
I'm doing great. It's been a wonderful day, and it's daytime, not nighttime right now.
Magical. We just have this ability to like snap and change all of the time around the world. It's wild. So James, we've had some interesting things happen in the world of finance over the last little while. I know that we talked with the profiteers here over the last. I'm trying to think. It's been a couple of weeks now. I know you were at West and Halifax, so we kind of set them with some thoughts and viewpoints, and then you kind of fucked off and left us. So welcome.
Every once in a while, I have to go on vacation to reassess and rework my brain, and this was no different. No, I just went to see my daughter, and it was lovely. But yeah, you're absolutely right. I did keep on throwing up some movies. I don't know if you saw them. They're
amazing.
Great little shorts about the beautiful Halifax. If anyone wants to go, I would definitely go to Halifax. It's amazing.
Right.
But you're right. A lot has happened since I left. I came back. Because I was so busy with my daughter, I did not look at my stocks once.
Yeah.
And then I got back and I opened my stock portfolio and my heart stopped beating. So what the hell happened? Like before I left, it wasn't great. It wasn't like it was amazing, but when I opened it on Monday, I think it was murderous. Like something big happened in the world. I don't know what it is, but
we've been talking a lot about the Fed chair, Jerome Powell, for a long time.
Yeah.
And his ability to control the market and dictate what's kind of coming next. And I'm just kind of bringing stuff up here as I'm talking. So Jerome Powell right now, and over the last little while, has been in Jackson's Hole, Wyoming, at a big conference, and this is their kind of it's their New Year's. it's the belle of the ball. It's the big one in regards to what their next moves are.
So who would be there? Who would be at this conference? Like,
so this is well, okay. So this all depends on who you think and or believe is involved with the Federal Reserve Bank. So the Federal Reserve literally has nothing to do with the actual government of the United States. They are a organization that was established at the Bretton Woods Accord and the Jekyll Island Accord to try to control inflation and trying to control basic, unemployment at the time. So if you go back in history and you look up the Federal Reserve Bank of the United States, it becomes kind of a wild process, and nobody really knows exactly who is involved and to what levels. Okay. So what we have right now is we have a chairperson who is basically saying that we got to get spanked again because inflation is continuing to run hot, even though Joe Biden said that he solved it. Thanks, Joe.
I was going to say, like, I heard, a speech from the throne. And the news person was saying that we are in fact not in a recession, and that it's never been defined, like you've been defining it for 6 months now, as 2 quarters where we don't have growth. Is that right?
Yeah. So basically, sorry guys,
but she came out and said, no, that's not the right definition. And that it's not that. So we are not, in fact, in recession according to the Biden government. That is what I heard just last week. So I don't understand that. I don't get it.
Well, so up until the Biden government decided to readjust what that means, in a recession was 2 negative quarters of GDP, right? If Trump did this, they take him downtown and shoot him, hang them up, and then piss on them. Like, it's just insane. But the media is just like, oh no, this seems plausible.
So in the media's defense, the clip that I did see was a reporter, and I'm guessing it was Fox News or something. I have no idea, but it was kind of taking her to task. He actually pulled out a dictionary and went, but this is what it says. Like, I don't understand where you're coming from, but this has been the definition for millions of years. I don't get it.
So recessions usually require a meeting of the National Economic Division. And what they do is they come along and they give the blessing that we are now in a recession.
Right.
Usually it's well after the actual recession itself. So you look back and you go, fuck, we're in a recession. Right? So I've been saying for a long time, we've been talking about this for a long time, is that we are in a recession. Like we've been saying months and months and months since we started this podcast that this is a dicey economic situation. So Jackson Hole comes out and we're saying inflation is going up. So the costs of goods are going up. Well, we're right here now. We think we've plateaued, but we're not sure. We have 1 month of data that's plateaued. That means that we're not growing inflation. Not that inflation's come down. It's just that we're not growing any more inflation.
Right.
Right. So that's a good thing. I'll give that a due, but it isn't a downward inflation. So it's like if you had $100 item, you got an iPhone, you want to sell it for $100.
Yeah.
In 1 year, to continue having inflation at that, say 10%, right? That goes to $110. But for next year, it's got to go to $121. You see what I mean? To continue to have that year on year growth of inflation.
Right.
It doesn't mean that the phone got any fucking cheaper and people can afford it, right? It's just that you're maxing on, max on. What we had is that we had shutdown, then we had expansion, then we had shutdown, and we had expansion. So these year over year numbers were problematic. So what we're coming into now is we're actually going to come into the second and third wave numbers, right? Remember we had 2020?
Yeah.
March, that was the first wave. We got through the summer. September, everyone was like, ah. Yeah. So now you have all of these problems where you're going year over year. So from the Federal Reserve Bank numbers, they're saying, okay, in 2021, we saw inflation at 4 or 5% from depressed numbers. Now we're 8 to 10% above that in 2022, right? So we're really 14 or 15% since the Wuhan flu.
Right.
And then all of a sudden now, if we continue this growth, now you're closer to 20% over the last 2 years. That's fucking runaway money. Like if you had $100,000 in the bank and you're like 2 years ago, you're like, hey, look, I'm doing well. Your buying power has been evaporated. That is now $80,000 in real money. All of you folks that went out and you got a raise at work. Great. Yeah. But your buying power has shrunk, right? Mm-hmm. That's why inflation is so dangerous. So where we are right now is Fed Chair Powell has come out and he goes, listen, we've been telling you that we want a soft landing. We want to be able to raise interest rates to cool the market, but we're trying to do that without crashing the economy. What he's coming out now and he's saying is that we are okay with what's called an earnings recession. So they're saying that a business, Apple, Facebook, all of these companies, the earnings that they're making become recessionary. So year over year growth slows, right? They end up in a situation where they have to make hard decisions around unemployment and employment numbers, but we're squeezing down growth. Okay. And that's how you're going to cap this inflationary run. Whether you believe that's the right way to do it or the wrong way to do it, that's where we're at because we've got 20% inflation, right? Yeah. Realistically, it's probably way more than that. Like your gas went from 65 cents a liter at lows to 135 at highs. Now you're in around that dollar range. What are you? What are you now? You're $1.40, right? It ran up to $2. Your barrel price went from zero. Literally, they'll give you oil if you can store it to 135 a barrel, right? And now you're sitting at around that 97, 98, 99, right? But this is where, going back to what we talked about last week, when we talked about this, I want to bring this up for you guys. We had, where do I bring it up? There. This is the SQQQ. This was my short play on the NASDAQ, right? Remember we talked about shorting the NASDAQ because we thought that the market was going to fall apart on us?
Yeah.
So this was our play. So what we did is we put in our buy order here. We put in our buy order here. This was a 10,000 unit trade. Okay.
Yeah.
So we bought here. And what we've done is we've rose up. And right now we are in a good position to continue running and probably end up in around there would be my take profit on this. If you were to follow this trade with me, this at 10,000 units, this at a $36 price tag, this would have been a $300,000 trade. And it is so far garnered $87,600 in profit.
Wow.
So this is a trade that was very easy to spot. This was not oh my God, I wonder what's going to happen here. And this was a situation where it was just simply clicking on the right time to get that cash, right?
Right.
So what we're able to do now is when we know that the Fed is on the wrong side of this, where they're coming in hot, you have to anticipate what the market's going to do. So the market ends up going, well, how hot? So now you get the litmus test of, well, fuck you. Are you really going to hit us or no? So you're going to get this volatile, oscillations within the market. Let's go back to that for a second. So you're going to get these
more possible to bet against the market.
Sorry?
It makes it more possible for you to bet against the market.
Well, right here. So all of this whole movement down is when the market was going up. This is when the NASDAQ was going up. This was that rally. Remember we talked about the bear market rally?
Yeah.
That was from here to here. That was when this sucked, right?
Yeah.
If I come over here, this is the QQQ. It's just the inverse. It's flipped, right?
Yeah.
I'll show you here in a second, and I'll show you my charts. But now where we are is we hit the bottom. Look where we were. Like, holy shit. Like, we were way oversold.
Yeah.
Or sorry, way overbought, right?
Yeah.
The MACD was way overextended. Like, these are hugely extended patterns, right? Same thing here. It got to the top. What did it do again? It's way overbought. So you got to remember when this was inverse, this was way down here on the QQQ. It's way oversold. So these things are flowing now all the time. The stock market does not go whoop. It goes right.
Up and down,
so
up
what
and
we're
down.
doing is we're catching these movements. So when we hit the top here and we've rolled over, this was us rolling over. RSI, relative strength index, rolled over. What did it do? Got caught support. MACD rolls over. And what did we do? We pumped. Boom, 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 boom. This also just happens to be the Monday after Jackson Hole, where Fed chair goes, listen, we're going to fuck you up if we have to. Like, look at that movement.
Yeah.
That's a parabolic movement. That's way up, right? Then you're getting consolidation, parabolic, consolidation, parabolic. Now, again, what we're going to do is we're going to start to feather around in this area here until we can figure out where our next move is. These are our 250-day moving averages. I anticipate it bouncing off that for a while and then continuing higher. Now, when we come back over here and we look at, we've been doing the NASDAQ for a long time and we've been charting it. Let's go back to the 6 months. Let's actually do a year. Okay. So this is where we are. This down is, remember, it's the inverse, right? This was the bottom of that other chart. As it rolled up, this one rolled over. This was that bear market rally. It hit its head on the channel that we've marked out a bunch of times. And where we are now is we see a shoulder, a head, a shoulder. This is a head and shoulder pattern. This should play out down into this movement. And this is here where it should probably start collecting support again. This is where we're going to start trading a little bit sideways until it gets another catalyst.
Right.
You and I talked a while ago about what the next catalyst was going to be, and that was going to be September 7th with Apple, right?
Right.
Apple is going to be a huge catalyst for the stock market. Apple is in every ETF. It's in every traded fund. It's huge, right? So the next one is September 7th. Whether they have a huge announcement, they're going to come out with the next sliced bread. I don't think so. I don't think they can get their fucking phones made.
I don't think so.
Good luck. So that's where we are with that right now, guys. We'll leave it there for tonight. As always, check us back in. We're going to be doing these a little bit shorter, a little bit more concise. I guess that's the word I'm looking for.
A little bit more on the topic. Yeah.
And then hopefully we're just not like firing at you. So as always, folks, thank you so much. James, thanks for listening to me. I ramble on like a lunatic and an auctioneer. So I appreciate your time.
I learn every time, man. It's awesome.
Like, subscribe, and share, folks. And let's make some money together, guys.
and let's heal our minds, bodies, and souls. Keep following us. You'll make some money.